following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome to everybody. Another excellent edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. And as always, we like to come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
So what do we have going on today? Well, it is one of those days where it's a down day. We're off 16 points on the S&P cash. I've been looking at this market as a bounce between 24.23 and 24.33. So this is a break below it. Volume is just a little shy of what I was looking for. 1.9 billion shares on the NYSE as we start the show. And we're about 3 points higher. I was probably still expecting a little bit of fun buying through the end of what's going on here. So I'm going to wait till the end of the day. But you get it closed below 24.23. I think you got probably a pretty good green light for staying short this market. I was hoping that we'd get maybe a little bounce. Maybe we'll get it tomorrow and get an opportunity to get better fills on those short positions. But in the meantime, I think we want to make it and wait for the whites of their eyes. I don't think anything has changed. Made some money last week on some shorts. Long term, I remain very bearish. And in my longer term newsletter, I did not get out. The daily trading newsletter, I'm waiting for a little bit more. We've got a few things going on in the market, but for the most part, it's fairly quiet. So as far as news goes, but we'll watch. You get a close over 24.23. That puts you back in that very small 10-point trading range on the S&P cash. Could you go all the way into Friday's close with a light volume as another push higher before this thing turns south? I think you can. Kind of surprised to see that the market was down and we haven't seen a lot of people trying to short the market so far. Just wondering if this isn't a bear trap. So again, I say wait for the whites of their eyes. I want to see some kind of failed rally, and maybe we see that at the end of the day. Maybe they push it with the last of the fun buying, and then we see yet another lower open tomorrow morning. In the meantime, we always like to start this show off with a little bit of history. And I see Andy Heck is in the house today.
And it's all just a little bit of history repeating.
It is history repeating. And on this day in 1969, we had the biggest explosion short of a nuclear weapon going off. Most people do not know about this, but one of the four N-1 rockets, a competitor to the Saturn V, Soviets intended to send its astronauts to the moon. It exploded on the launch pad, actually exploded maybe 100 feet off the launch pad. It had 1.5 million pounds of fuel in it, liquid oxygen, kerosene. Actually, the skyport that they sent their rockets off for was in the middle of nowhere. But they found pieces of the rocket 5 miles away, an hour after the explosion happened, as they were showing up to put out fires and everything else. They still had fuel raining down on them from the mushroom cloud. But basically from the recordings and the data, it was at least as large as the Hiroshima bomb. So a lot of people think atomic bomb's pretty big. Well, the other side of this is that 85% of the fuel did not explode. That was only 15% of the fuel at that point. They had decided to use a lot more smaller engines. Saturn V, of course, on its booster had 5 big rockets. There was a problem trying to figure out how to make those big rockets work. There was so much turbulence inside those bells at the bottom of the engine that they tended to cause oscillations and literally rip the metal apart of the rocket venturis on the bottom of them. And they just kind of did a trial and error until they found one that worked. The ones that you see down there at the Kennedy Space Center, some of the other things, are all the ones that didn't work. And they left those around forever. The Russians tried to copy them. Of course, they didn't work. They destroyed all the it's like a big shower nozzle on the bottom of it. Anyway, that specific shower nozzle, they destroyed all the drawings and everything else about it. So after the space race calmed down, we weren't firing off Saturn V's anymore. And getting into the 90s, most of the engineers that designed it had died. No one knew how to make those rocket engines that big anymore. Of course, Jeff Bezos decided to go out there and dig them out of the ocean so he could take a look at them and figure out how they were done so he could make his own rocket engines. Of course, the Soviets had something that we didn't know about at the time, and that was the ability to make very good stainless steel, a very special blend of it that would stand up to the temperature. We had no idea, even into the late 90s, about how to do that. So they were able to make these engines that were about 20% more thrust for the same amount of fuel. And in fact, since all 4 of these N-1 rockets that they had eventually built had blown up at one time, the one that got the farthest, I think, got it up in 1 minute and 30 seconds and blew up and landed 5 miles away. But they decided to use a bunch of rockets. This one had 40 different engines on the base. And what would happen is just one of them would fail and take out all the plumbing for the fuel going to those engines, and just caused a chain reaction. The computer software was kind of in its nascent ability to do anything in 1969. And of course, this one literally got up like maybe 100 feet. And because it found a problem with one engine, decided to turn them all off. So it got up 100 feet, turned them all off. The whole thing fell on the launch pad, totally destroyed it. Took 2 years to rebuild the whole thing after it literally got nuked without the nuke. But a lot of people think big explosions can only happen with atomic bombs. But well, we've seen the mother of all bombs this year. You can make some pretty big bombs without nukes. And on this day, the biggest explosion, single explosion, ever released by man happened. And most people never know it. We'll be back after this to start talking about stocks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as we continue on, the EIA numbers came out, of course, a day late because of the vacation this week. EIA Petroleum, EIEO. Petroleum inventories were down 6.3 million barrels, versus the down 2.3 million barrels everybody thought last week. What do we have for crude right now? It's up 24 cents, no big deal. Gold up $1.90, silver up 8 cents, no big deal. So pretty quiet reaction, especially with the dollar down another 0.4% at 95. It's at 95.59. So we've got some movement, but not a lot of movement everywhere else in the market. So we'll take a lot more of it. Gasoline was down 3.7 million barrels compared to the down 1.1 million barrels. So that was a little bit more bullish, I would imagine. Andy Hecht will be on in the 3 o'clock hour for Tom O'Brien and do his good commodities hour an hour earlier. So you get a double shot of Andy today. He's in the den speaking as we speak. What else do we have going on out here? I think that's about it. Let's get into the charts as we start off the day. Wanted to take a look at a few of these. Look at the first one, which is Tesla, down yet another day today. Got to 306.94 so far for a low. Again, there's some nice gaps down here at about 280, which is pretty much where this thing's going to go to this high volume update of April 3rd. That was about almost 14 million shares. So you're going to look at that. We got 15 million shares already. So I suspect that we're in that 280 area right now in the next few days. You've got 3 days down. Can it go sideways for a few days? It can, but my guess is you're going to get any uptrend is going to probably move this thing back down to those gaps, 270 and 280. Of course, I've never been I like the car, and I like the company. The CEO, I even like him. Unfortunately, there's two kinds of people, those that overpromise and underdeliver, and those that underpromise and overdeliver. And the reason this gap down yet a third day in a row with a volume is that we found out that his delivery schedule again was a little bit of pie in the sky. So I think a little bit of reality, the fact that we've got 50 different companies lining up against him for self-driving cars and electric vehicles. Volvo announced yesterday that, of course, they're going to be making either hybrids or all electric cars in 2019. So again, the whole idea that these guys can get a 25% margin on their cars, which I don't think they ever got. I think that it's a extremely creative bookkeeping. And you've got some of the best shorters and bookkeepers saying that this is a lot of fluff. Still don't know how bad them buying Solar City will hit the bottom line. They've been able to kind of tamp that down. But, you know, all he has to do is go out there and say he's got a boring machine, and then he'll go out and everybody wants to build a tunnel somewhere. As we said last week, boring a tunnel is the most expensive by a factor of 4. You can build bridges cheaper than you can per mile than you can build tunnels, which is kind of amazing. So it's actually the thing of the last resort. And I have yet to hear that he's built this tunneling machine that tunnels for less. That he can build one that does it quickly. But you still have to shore them up and make tunnels every half mile so people can get out if something fails. There's just a ton of stuff out here. He's got a lot of pie in the sky stuff. Still thinks SpaceX is the best business that he has long term. And it's, of course, the only one that is not public. But we can't get into that right now. And, of course, he's once again bloviated another thing here. Somebody posted in the den. I think he's a nice guy. It's you start to believe your own press, and you're in trouble. And the press likes to build people up and tear them down. I'm just thinking that they're going to want to tear him down a lot farther than they built him up, and it will be coming. Apple's been playing around the low of days out here, or the recent low, let me put it that way, back to the 142.20 June 16th low, 72 million.3. So when we look at that, what do we have today? About 15.7. That's kind of got me thinking that, do we go lower? Well, we can. Doesn't look like Apple's really tried to bounce any here. But this is one of the things that has me thinking that maybe we've got a little bit of a bear trap. Maybe this bounces tomorrow and kind of brings the market up with it, gives us just a little bit better. I'm not really worried about anything over 2433, but I would much rather short it at 2433 on the S&P than short it today sitting on Apple on light volume. They can just come out with two bogus press releases like Mr. Musk and boost it for a couple of days. There are a lot of people that just want to believe, kind of like that poster in the X-Files. I want to believe. Well, a lot of people want to believe in Tesla and Apple and a lot of these other stocks. Of course, one of the stocks out here that should get the loser horn is L Brands. L Brands is down with huge volume. I know Victoria's Secret, by the way. This certainly looks like it's going back to this double gap, which is just at $45. So pretty much all the pain, I think, is in this one. But somewhere around $44, $45, this thing is probably going to find some kind of support in the next few days. So we'll look at that. And let's take a look at some of the other ones out here like Amazon and the big leaders, see what these things are doing. You had a very plain double top with Amazon, unfortunately, or fortunately, depending on how you think about it. the volume was pretty good. You had 5 million shares on the 19th compared to, what was that, 3.3 million shares, suggesting that maybe you get one more run. This is the strongest of all of the stocks. So could you get a little bit more push on this? You could. Microsoft is laying off 3,000 people, mostly in the sales division. That didn't seem to do anything for Microsoft today. A little bit of a bounce, but this thing certainly looks like that 6650 is where this thing is at a minimum is probably headed into that big gap going back to the 24th of April. What else did we have out here? One of the recent IPOs continues to go lower, and that is Blue Apron Holdings. This down again today, much lower than the IPO. There's another IPO in the wings. I can't remember the name of it. I was reading about it earlier today. It looks like it's going to price fairly low. So we continue, I think, to see kind of a weak market. Now, could they just bounce this a little bit for that IPO tomorrow morning? They could. I don't know if it's big enough for them to do it. Again, I'm waiting for the weights of their eyes, and that's probably going to be in the last 10, 15 minutes of the day. We'll be back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Trading is different than investing, but the opportunity to take advantage of short-term trends is only one if you get the direction right. Direction leveraged and inverse ETFs offer bold trades on U.S. and international stocks and bonds. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we had a question of which IPO that was, and well, it's been pulled, so I do not know. But normally, if you go to Renaissance Capital and you look through their stuff, you can find it. I heard this on Bloomberg earlier this morning, but it looks like they just went ahead and pulled it. It looked like it was having problems. Anyway, it was down just like Blue Apron was last week. So not a lot of extra cash out here floating around. Again, we're at 24.15. We're off 17.5 points. Anything below a close below 24.23 and 24. Let's call it 23. 24. 23. That's probably about right. Going to be pretty much a victory for bears, although volume has been light so far. And of course, you're going into Friday. Wouldn't be surprised to see them kind of push this up, maybe up back into that area tomorrow. But again, if it's on much lighter volume, that may be the opportunity to pull the lever. I continue to think that the money is going to be made by waiting and getting a very good confirmation out here. There's still probably a few tricks left up the sleeve of some of the bulls, but we'll continue to keep an eye on it. Other stocks out here today are Express Scripts. This is down today, or not Express Scripts, excuse me, just Express. It's a retail mall company. Again, not a lot of juice so far, but again, almost all this volume is coming in the last 30 minutes of the day. Another one in that same vein is Urban Outfitters. This thing had been kind of trying to move higher. It failed today. Volume starting to pick up again. At the end of the day, much more important to see the volume. June 8th low is $16.19. I suspect that's where Urban Outfitters is headed back to. Every time you turn on CNBC and you listen to the bobble-headed moron, he's always talking about how much money should be made in China. Unfortunately, every company that's gone to China has lost their proverbial donkey. And you know what I mean by donkey. And everybody just keeps we're going to go there. We're going to go to China and make lots of money. Going to make lots of money. But what else can you say? Everybody goes there. They say they make money for a little bit, and then all of a sudden, China doesn't like them making any money and taking any out, and the bottom drops out. And that's what we've seen in China. The whole idea was if we just separate the companies, then everything will work a lot better. And of course, to me, the only thing that really meant it could be is the book could be cooked a little bit more than U.S. books over here. So can't really go over there and do anything without ending up maybe shot in a field for China. So I've always been very wary of investments in China. I know you're always just one click away from some of the Chinese communists from taking all your cash. So I'm never a fan of it. But you always get these monster moves down in these stocks, and it's always a giant surprise to Wall Street because they can never think of anything going wrong in China. Although, how many companies have we talked about that have found massive losses there? Apple, Qualcomm, who else? Well, now Yum. I mean, I probably should have started writing it down, but I think that you could probably, if you did a little work, find 50 companies that all said that they were going to make huge amounts of money there and find out that they weren't making huge amounts of money there and eventually left. Oh, Google and Facebook. And who else said that there was a pot of gold? In fact, I think if you go to China, you should just always watch for that rainbow and some very small people standing around a pot of gold, because that's all I hear from stories over there. Chinese are very smart individuals, and they do not want to give money to anybody outside of their own country. And I think there's a lesson to be learned in that. Another one that gets the proverbial losing horn today is Tahoe Resources. Tahoe got shot today, 8.50 closed yesterday, down to $5.12 today. Any kind of mining, natural resources thing always has a problem. And this one's no different. The mining contract from the government was not renewed on this company. And that's why it's always kind of a feast and famine. Let's take a quick look at some of the NFLX, some of these other ones. Now, this is another one where I think you could see a little bit of a bounce in some of these. The chart pattern's not all that bad for Netflix. You had your big gap up on April 25th. You did so on 20.5 million shares. You came back 4 million shares 2 days ago. Yesterday, 4.6 million shares. Today, 3.6 million shares. You pretty much filled that whole gap. So you're pretty good support. Now, one of two things is going to happen. One is that the semis just hold here and they find support, and the rest of the S&P follows it down, which is one option, or that these actually bounce. The downside is I haven't seen a lot of people or action that makes me think that a lot of people are ready to pour into these before the next day. And again, if we probably saw a lot of cash pouring into these, we would see it in those funds by the end of the day. So again, I'm just kind of sitting here watching very closely. But Apple's not that too far off the lows. Netflix not too far off what support should be. Let's take a look at some other ones out here. See if IBM's done anything. It's been going sideways for so many days. Well, this one's dipped a little bit lower. Looks like it's ready to go back and test the 149.79. It got down to 152.23, but still lower on the day. So, maybe we could just kind of the next 4 or 5 days go back here and test lows on lighter volume. But I don't see anything that says a bounce so much as I see a lot of stocks that support in the semiconductor space and around the tech sector. And maybe this is about the time that we start looking at other sectors. IWM has been down today. This one did gap down. Volume has not really increased. The last low, 139.01, was June 22nd. You had almost 32 million shares. Got about half that right now, 17.2 million shares. So again, there was a couple things that would make me think that we were going higher, and that would be a lot of people shorting this market. I see still no evidence that shorts are piling on in the market. In fact, just the opposite. I see more people thinking that the market's going higher, but very few people stepping in. And again, there's nothing more dangerous than a market with very few shorts, because when the bottom drops out, there are no natural buyers. And we continue to see very light volume in individual stocks being short. We do see a little bit more action in puts and calls and futures for downside protection. But for individual stocks, there's not a lot of people that need to literally buy the stocks back, and that continues to be an issue. We'll be back before you know it.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
John Logan has been hard at work making the TAS Profile Scanner Plus the best it can be, and he'll be hosting a special hour-long webinar for all TAS Profile Scanner Plus subscribers this Wednesday, July 12th from 5 till 6 p.m. Eastern. Right now, you can get a 30-day free trial to this amazing piece of software. See for yourself how it tracks 5,000 financial instruments in real time, over 17 different stock exchanges, U.S. futures, and currencies. This piece of software will change the way you trade, and it can be used with any trading methodology. The combination of price and volume is what makes market profile-based analysis so unique. We've opened up a 30-day free trial to the TAS Profile Scanner Plus, even if you've had a trial before, so now is a great time to sign up. You also gain access to John's July 12th webinar, How Price, Volume, and Time Make Market Profile Unique. Sign up for your free trial to the TAS Profile Scanner Plus right now on the front page of TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
S&P down 19 points now, volume 2.1 billion shares, so kind of lighter volume. And I would certainly like to see a light volume bounce to pull the trigger. Maybe we get that tomorrow on Friday. I think we're kind of close. So long term, I remain short. Short term, I'm kind of waiting for some hooks and maybe a little bit better signal. The semis have rolled over. I think maybe a lot more of the NASDAQ could too. We're very close to the recent lows in Apple, although the volume's low. But it's not uncommon, especially in the summer, to see a light volume pullback in the market. So we may not have as much of a pullback, but you can have pullbacks without much volume. That's just bullish longer term. But we'll see how this thing works out. Trying to see if anything else I wanted to look at here. SMHs. Got any questions out here? Okay. Someone wants me to look at the SMHs. And what do you have on that? You know, I kind of thought that the first support level is right around that low $81. I think I was said in the den $81.25 or $81.20 or something like that. That's kind of where we've come into this support level. You do have a gap, which I think this thing could find a decent bottom part chance at about $79. And I don't think that going along here makes any sense. If you tested 79 on lighter volume, I would think that maybe that would be the first sector to bottom, maybe why the rest of them continue to sell off. Let's see else out here. I wanted to look at a few of them. We looked at IBM. It's moving lower. Let's take a quick look at Micron, which has been the big leader out here, and then we'll look at NVIDIA. This thing is cracked. It's closed below its 3x3. You're kind of getting up to this resistance level now where this thing should continue back lower, I think somewhere around $27, but not probably the least one that I want to short. NVDA, we'll take a quick look at that. And a very good indication of what we talked about in this 3x3 double repo pattern from Joe DiNapoli. That's something like 10 or 15 days above the 3x3 or the 9-day moving average, a couple of days below it. You go back above it, and then the next close below it, you pull the trigger. And as long as it stays below that line, you can stay in the short. So this would get you a short at about 150 and, whenever this thing taps out. I suspect that you could get back to the 108 area, 105, 108 on NVIDIA before the end of the summer. That may take a little bit more doing. You can give me a call at 877-927-6648. you can email me at path@tfnn.com. And, of course, you can always post a message in the den. I had an email a little earlier, and I did respond to that email. And it doesn't tell me who he is or where he's from, other than he's Mr. Hammer. Anyway, what other we go here? Anyway, he's wondering about JNUG and Nugget and some of these others not moving with gold. And maybe we don't talk about it enough. I know we always have new listeners, people that haven't traded this before. But just remember that when you trade these leveraged vehicles, they are based on futures and on options to get that bigger than 1-to-1 ratio for the movement on it. So you're going to get what's known as contango and backwardation on both of those. And depending on what you're doing, they can severely affect the 3x3 the 3-time response that you get on some of these leverage ETFs, especially in commodities. A little less in the S&P and those kind of things. You do get quite a bit of that in the VIX leverage products too. So of course, the VIX leverage products are based on the premium price of out-of-the-money puts and calls in the S&P. So you're going to get, anytime you look at those things that especially are based on futures and especially on commodities, you're going to get people paying more for products or less for products than they can buy it 3 months from now. And that backwardation and contango can be an issue. So just before you get that head deep in it, you probably ought to look at those. You can just look them up on Wikipedia, or I'll be glad to email them. You can always email me at path@tfnn.com. So what else do we have going on? Just looking to see if anything's out. We're off 130 points on the S&P cash. Continue to melt, which is kind of interesting on a day that should be the end of fund buying and anybody that's got cash throwing it at the market. Still off 19 points. Volume kind of quiet here, though. 2.1 billion shares on the NYC consolidated tape. So we'll see how the end of the day comes in. I know we've got Andy Heck in the next hour. He's warming up in the bullpen to do Tom's show at 3 o'clock. And then, of course, his wonderful commodity report. Maybe he'll talk a little bit about contango and backwardation and how that affects some of these leveraged products, especially leveraged products in gold. Everybody likes to see. What else did we want to look at out here? I think I went through some of these other ones. So I do want to take a look at these. Give me just a second to pull them up. Stock lists. Okay, NASDAQ 100. I'm going to go back down and look through these because this one looks like it could be the one that's getting close to finding some kind of lows. American Airlines starting to break higher than its previous high back on December 9th today. So that's a little bit interesting. 7.2 million shares compared to 10 million shares. So you may have enough time to actually get to that volume level. Doesn't look like it's going to blow it away. As we said before, Apple bouncing around these recent lows from just a little while ago. 72 million shares, but you're only hitting that with 16.6 million shares. Adobe, this did go higher with volume, so you could potentially get the same thing. This is below its 3x3. As long as it remains below that, I would stay on the short side of Adobe. Let's see what else we have. ADI, which is analog devices. This one spiked well. It's still under the 3x3. So you're going to need a little bit of a rally out here to really change any of these trajectories. ADP, no big deal. Autodesk. Now, this one looks like it may have found a little bit of its low, although I would like this thing to come back to 97 if I was going to buy it. Gapped up on earnings on the 19th of May, did so on 10 million shares, came back into it with 1.5 million shares on the 3rd. Yesterday we had 2.7 million shares, got about 1.7 million shares. You can bounce. I would have liked it to get just a little lower. It hadn't gotten there, but we'll take a look at it. And what else do we have? We'll look at a few more of these stocks in the Nasdaq 100. A few of these look like they could have been finding a bottom, and again, that just means that maybe these start to rally a bit, while the rest of the S&P starts selling off on its thing. Not everything goes down at once.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And as we've been saying, our friend Andy Heck will be taking the reins at 3 o'clock for Tom O'Brien today, handling his show and then doing his commodity show between 4 and 5. So you get a double shot of the wonderful Mr. Andy Heck, my brother from another mother, although we don't get to talk as much as we used to. His wife is getting in the way. That's what I'm going to say. Just kidding about that. He has shortly been in wedded bliss. 2.2 billion shares as we start the show. So what else do we have going on here? That's about it. I don't see a lot of signals just yet. I want to see some. We've closed below the 20, or let me put it this way. It looks like we're going to close below the 24-23 area. So that is bearish. Volume is not really picked up. Of course, this is a short week. I would really like to see a little better signal, and that's maybe a pop before the end of the day or through tomorrow on Friday on lighter volume than we've even had on this move down, to still signal that most of the people are not willing to dive in. They want better prices before they pull the trigger again. So we've got a little bit of a signal, but I suspect we could have a little bit of a very short bear trap that could run people out of their short positions fairly quickly. That's what I want that pop for, to give me just a little bit of extra elbow room if we get it. Wanted to look at Baidu closely here, some of these other stocks. Again, these things kind of in these trading ranges, no great signals. You went higher yesterday with some volume, but kind of gave about half of it back up. You gave the rest of it back today, so there's not a lot in it. The IBB, we said that, if you were going to pull the trigger, you wanted this thing to come out of its trading range and get up to about 320, got to 323. It got back down to 310 out here. It is and continues to be on a sell, although you had some decent energy on the way back up. 305 would be kind of what you're looking for, I think, if you are thinking long on this. I still suspect that this thing is going to roll over with the general market, but I think we just need a few more days out here. Costco, well, it was kind of interesting earlier into the day. It did open up higher, gave it pretty much back, volume picking up a little bit more compared to the previous few days. Cisco also not really feeling any love. It's solidly underneath its 3x3. You got a test out here of $30.08 from the May 18th low. And, of course, you got, 12 million shares. So, again, these semis look like maybe they're trying to find a bottom over the next few days. But even if they start to rally, I suspect that everybody's been moving into the other stodgy bricks and mortars, steel, all the other stuff, the industrial stuff in the S&P as a safety play. I suspect that one is crowded trade now, and that's probably what you're looking at. So if those continue to move down, you're probably not going to get a bounce in the semis. They've probably got a great deal of the downside, short-term downside priced in. You're probably looking elsewhere with a little bit of sector rotation to take a look at it. CSX, take a quick look at this. Some of these like this, they continue to be pushed higher. I looked at this one the last 4 or 5 days, and just the very light volume, even yesterday, 4.6 million shares. Today we've got 2.7. I'm thinking that maybe in this area is what we're kind of looking at for the next move back down. This one could see weakness to $48 over the summer. So we'll keep an eye on these industrial or more industrial of the S&P 500s and probably shy away from adding new positions in the semis right now. See you tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.